We're live, I believe. There we go. We're live on YouTube. Awesome. Make sure I'll keep that up. We are ready to rock. Hey, Richard. Peter, good morning. Petro's here. Oh, nice. Glad to have you back. Oh,
Matt, your name says Zoom, Roger Zoom.
mm.
Gonna have to change that.
Yeah, let me
We only have
fix that.
152 people here. What's going on? Is there a class somewhere? Good morning, Murray, Ken, Steve, Robert. It's cold in this room, Murray. I actually just had a jacket on. This room gets very, very cold. Yes, I know it looks like I'm on the beach, but you know how it gets. It really does get very cold here. Good morning, Pink Sparkles. Robert, Murmis, hello there. Omar, Jeffrey, Cyrus. Jack is having a presentation. Why doesn't it store our email for signing up for VIP session? We have to enter it every day. I have no idea why, Al. You can always go on YouTube too. Good afternoon, Dom. Yeah, it gets cold at the beach sometimes too. Press RN and I'll look into the email. There we go. Cyrus, Glenn, good morning. Ken, good morning. Deanna, did I'm sure you made sure that the email went out. I mean, you're here, so obviously you did.
Yep, I'm gonna send one
Hope
more
you're
with a
doing well,
YouTube link.
Deanna. All right. All right. Let's see. Here, we're just giving the room a minute to fill up. And we will be starting in about 2 minutes. Let me share my screen. Go ahead and turn off close my TC2000, open it back up again on a different computer, and we will be rocking and rolling. There we go. And this thing is so fast. I love it. Can't believe it's Tuesday already. Feels like it's the weekend just finished. It's already here. Yeah, Clyde never comes in here, Murray. He never ever comes in here. All right. You guys should be able to see my screen now. There you go, Frank. Hey, you guys gotta come on time. Good afternoon. Good afternoon,
Nice.
Robert. Nice, nice, good. I'm glad you got it's a nice little quickie. We still have two short trades in the pit. Please don't call them out. Those are viable, very viable trades. Go back the way you used to arrange your screens. It's too small for us to see when you have it like this. Scott, I have not made any changes to how I arrange my screen in several years now. I right now am sharing my entire screen. Uh, I'm my entire screen. My video, my face is not even on the screen. So you're looking at a 25-inch or whatever, 22, 25-inch monitor. Um, Go back to used to arrange. Yeah. Yeah, you can make the screen larger. You could do everything you want, Scott, to it. I have no control, no control here. Picture to another screen. I did. I moved my picture to another screen. My picture is on a totally different screen, completely different screen. Yeah, what Deanna just said. You can customize us. You could do whatever you want with us. We're pretty straightforward. All right. Yeah, it's that time of day. Let's begin. So first things first. There's something interesting, and this is one of the reasons why I like to have those morning calls, because sometimes you guys say something and it starts me thinking in a different direction. Another thing, Matt is making really good progress, thanks to Brian as well, for the code he gave us for creating that little scanner that I wanted that tells us how many times um, something has beaten earnings estimates over the last 10 years, not over the last 4 quarters, over the last 10 years. Now, how many, how many, um, how many quarters is that? Let's see, 10 years, 4 quarters. That's 40 quarters. That's definitely enough to get some idea of whether the stock underperforms or not. Thanks, Murray.
We're
Yeah, so
actually pulling up to 45 if it's available.
so some are available to 45, you're saying.
Yep.
That's good. Yeah, I just made my I did exactly what I did. I went and pulled up our mugs to a completely different monitor. I honestly don't know what it is. If you tell me what I need to do, Scott, I'll gladly do it. I just don't know what it is I need to do. It seems like everybody else can see it perfectly. You guys can see I'm sharing my entire screen right now. And there's nothing, my face is not on that screen or anything like that. We got 212 people. And you know what? Also, I want to go to YouTube, see how we're looking on YouTube. Hold on, let me.
74.
All right, let's go to our YouTube channel so I could take a quick look. You guys just go to the live tab right here. You got the questions right here, and I'll just slide this over so I could say hello to everybody on YouTube. Peggy, Mrs. Smith, Tony the Tiger, KC, how are you guys? Good to see you guys. Yeah, 76 people. All right. All right. I think it's time we begin. I don't know, Scott, but I'm sharing my entire screen. All right, all right. I don't want to take up more time with this. Let's go through market analysis. So we had the PPI report come out today. Here is the information. Now, bar chart, you got to be sneaky with bar chart. Bar chart said that they were uh, bar charts. Bar chart said that their estimate was 2.3 and 2.6. No, 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 no. Consensus was 2.6 and 3.0. It's right here. But it doesn't matter. They actually beat estimates and they did really, really well. Frankly, bet a lot better, a hell of a lot better than I thought. Hey, BitBoy, a hell of a lot better than I expected. Bodine says, formal change from each thing every day. I don't think you guys are doing it. Zoom just seems to, yeah, Zoom does all sorts of different stuff. I'm not doing anything differently at all, at all. Zoom has a mind of its own. Um, Now, one second. Okay. So let's let's make sure that tomorrow, the big report. And again, if I'm getting distracted, it's not because of the comments, it's because I'm really looking at the screens and I'm looking to see what the markets are doing. And I'm trying to do that in real time. Tomorrow we have CPI. Notice the CPI Now, here's where things get really, really hairy because again, even if we beat the estimates, we're now saying that inflation is going to rise at a rate of 2.9% versus 3%. It's not to me, this doesn't seem significant. The changes that we're seeing, the best case scenarios, they don't seem to be nearly as promising as what the Fed is making them look to be. Okay, not even close. So I'm still very questionable on what I'm seeing from the market in terms of perspective. And I'm not really believing that the Fed is going to take action in September unless they absolutely must. Powell knows really well that if he takes action in September, that by Christmas we're gonna be back to where we started. So it's not necessarily a really good thing. Really, it's not necessarily a really great thing for us to start flirting with interest rates faster than we need to. With that said, the bond market, let's take a look. Bond market is reacting. We're nowhere back where we were when the market started cooling off and fearing in recession. We're not seeing recessionary fears right now. We're not seeing recessionary fears right now at all. Okay, there is no recessionary fears. If there was recessionary fears, the energy market would not have bounced back so hard and trading now above the 50-day moving average. It would not have done that. Okay. Um, so overall, we are moving in the right direction right now because we moved above the 100-day moving average, but we are not above the 50-day moving average. If we don't break the 50-day moving average, the market is we're right now in a twilight zone, literally in the twilight zone. Okay. Um, Terry says if CPI is as good as PPI, there will be no need to lower rates. No, no, no. That's not how it works. If the PPI, if the CPI is good tomorrow, that means that they're moving in the right direction, and they can maybe begin now lowering rates depending on how the employment is going to go. Blah 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 blah. Um, but again, if that's just confirmation that what they're doing is working, Perry. But again, it's just one report, and they still have quite a while to go um, till we get to September, and we still have one more report before we get to September, don't we? Yeah, we do. We still have one more CPI. We still have GDP. We still have some reports before we get to September. Also, um, they're going to be looking at unemployment as well. I personally think, based on what the Fed said last time, they're not going to take action. They're going to need to see more evidence. And if that's the case, the market's going to weaken because um, the market's anticipating right now and pricing in and getting really excited. This reaction is partly because of the excitement. This was, oh no, we're going to have a recession. Oh no, wait, we're not going to have a recession. Um, the Fed is going to take action and we're going to start lowering rates. Well, are we or are we not? That's the $1 trillion question. We're not at the 50-day moving average yet. Um, this is more of a twilight zone. We're above the 200, which is fine. We're above the 100, which is good, but we got to get above the 50-day for us to become bullish again. On the QQQ, same thing. We're above the 100-day moving average. Exactly, Ken. Exactly. Exactly. It's exactly what Ken just said. He said, I want to see a lot of good data. This is not a lot of good data. This is good data, not a lot of good data. I think they're a little too optimistic. But that's not really on the table right now. But so again, I'm not going to get hyper bullish. I'm not going to get really, really bullish till we start getting above the 50-day moving average. Then I'll start holding on to longs a lot longer than right now. Right now, we have a two-sided market. This is definitely a two-sided market, and this market favors the bears just as much as it favors the bulls. Matter of fact, I'll show you. Take a look. Take a look at this. These are my sectors. Okay. Okay. Look, basic materials. We're between the 200 and the 50. 100's up here. doing nothing. Industrial. All right, industrial's looking better. Industrial's starting to come up above the 50. We'll give it some points. Communications doing good primarily because of Meta. XLK is hitting the 100-day moving average as we speak, and that's what's driving the market today. Um, Healthcare is looking great, but that's not here nor there. Um, Energy's kind of falling back. Consumer staples is defensive. See, defensive stocks are the ones that are rocking and rolling. That's a red flag. Financials are starting to come back. Real estate never left its fold, and retail is kind of in between the twilight zone. So things are still very, very much mixed. Yeah, but right now, because we're just doing this right now. We're not going anywhere. See, we're shaking and baking. So you got to go up here, take profit, go down there, take profit. You can't let the market, you can't, on one hand, it's kind of a weird thing, right? When the market's choppy, when the market's choppy, on one hand, you don't have to worry about your stop losses as much, right? Because things don't run away from you. On the other hand, you're like, okay, I'm going to let my profits run, and the profits don't run. Right now, the market is trying to convince you that letting profits run is not a good idea, and you should be getting out of your positions really, really fast. When the market's trending, the market's trying to convince you that you should stay in trends longer. The market does that to you. It pulls a 1-2 on you. It's trying to screw with you. It always does that. All right. Gold is factoring in a rate cut, more borrowing, and more devaluing of the dollar. Yeah, yeah, it is. It is. Everything is right now. Maybe. We'll see. We'll see what Powell says tomorrow. We still have the CPI. We still have retail sales. We still have consumer sentiment. We still have a lot of data. Remember, the market likes to, the market is it's like a little kid. It gets too excited for its own good. Not in the long run, but in the short term. It gets very, very excited. Very, very excited for absolutely no reason. Okay. Okay. So sectors are mixed right now. And again, I'd love to tell you that we're out of this danger zone and everything is hunky dory and this is going to happen. But right now we are not. We still have a lot of risk on the table. It wasn't easy to find long trades today. Some of these things are just finally coming out of the coming out for air. Jeff says, where on your chart does it show legend above which moving average it is? They're just different colors. I have red, white, and blue for 100-day. So the red one is 200-day, the white one is 100-day, the blue one is 50-day, and then the other two are the 15-day and the 10-day. Those are purple and red. Yeah. I'm trying to confuse you, Jeff. Can't you tell? My job in life is to confuse you. No, I'm just kidding. Let's see how many people we got on YouTube. Well, 106, and we got 240 on Telegram. Interesting mix. Is Jeff Carter still have his course? Jack Carter, not Jeff Carter. Thanks, John. I appreciate it. Go ahead and grab that, John. I mean, from John, Matt. Okay, so we talked about fundamentals a lot this morning. We talked about technicals. Sylvia, why are you talking about a trade that we have in another service that has nothing to do with this? Why? Why? There's 300, almost 400 people listening. Why are we doing that? All right. If you can always send me an email and I actually respond to them. But if you expect me to answer a question like that here, it's just not going to happen. And I've always asked you, please don't mention trades that we currently have on in this room. All right. You get that, Matt, from Brett. Nice. Good for you, Nathan. Join the Uncle Roger party. All right. So, as I explained, we're in the twilight zone right now. We're not going to make huge bets. We're definitely trading. No, we're not out of the trade, Greg. We're not out of the unless Matt got out of it when I wasn't looking. Did you get out of it while I wasn't looking, Matt? Oh, you did.
Hmm.
When did you do that?
Like 10 minutes ago.
Okay. Well, there you go. You see here, first of all, let me apologize to you. Who was it? Sylvia, I am so sorry for being an idiot because I didn't realize that by the time that you posted that Matt had already sent exit instructions. Now, you would think Matt would tell me. You would think Matt, Omar, I had no idea. Remember when I tell you that Matt and I do a lot of communication around here? Now, Matt sits about 8 feet away from me. You think he would tell me, right? You think he would tell me, right? Yeah. Uh, no, no, of course you did. I just didn't know. Matt didn't tell me. Remember, I have to pay Matt for every word that comes out of his mouth. Remember that? Steve says, I don't see a profit on Albemarle. Matt, how much did you book on Albemarle?
10 cents.
10 cents. How much premium did you get out of it?
Uh, what do you
When you took the premium, how much did you get out of it?
think we got 45 cents?
Right. So you closed it for 35.
Right.
All right. Now, Steve says, I don't see a profit in that. And I'm going to point this out. Steve, how much premium did you take in that trade? You were in at 54, so you took extra profit on that trade, Mitch. If you were in at 54 and you got out at 35 like we all did, then you got twice as much. Yeah. Yes, but when Matt took the profit from the trade was cheaper. Right. Huh. Interesting. Matt, what did you get out at?
Uh, 10 cents.
And you're sure you got the 10 cents?
That's what I was showing on the Excel sheet. Let me, I'm going back through toss right now.
All right, he's going to go through it right now. Again, guys, this is something Matt does. This is not something that I do. I tell him how much I want to take on a trade, and he does the rest. Yeah. Yeah, about 10 minutes ago, 10, 15 minutes ago. So again, you guys and Matt deal with that. I'm just going to stay out of it. I told Matt if I can get 20% overnight, which would be 10 cents, then we're good to go. Now, Fluffy says it's in the 60s. Murma says not profitable either. Matt, you may want to send some instructions and put the trade back on.
I put in the instructions, get out of the position as long as you can keep 10 cents.
Oh, okay. So that's fine. So yeah, so they're not there yet. So yeah, if you can't get 10 cents out of it, don't do it. Don't do it.
And it's going down. So
Would you let everybody here know, interrupt me and let everybody know when it's time to get out?
yep.
All right. Again, you see, guys, I have to pay for words here. Yeah, so I guess if it hasn't hit that level, we haven't. Again, he deals with that. I don't deal with that. So we'll know when it happens. All right, now let me go through my trades. I'll do the short side first. Steve, if there's no profit, leave it on. It says in the instructions, if you're not at 10 cents profit, don't do anything. So you have to wait till it's at 44, Steve. Put a limit order in at 44. Again, you shouldn't trust the Telegram for that. You should trust the members area for that. Trades are not posted in the Telegram, only alerts are. And I'm not going to micromanage this right now. That's all I'm going to say about this. And that's it. All right. This is something you guys can deal with Matt. His email address is matt at rogerscott.com. All right. So let me give you trades. This is the short side. So tomorrow we have the CPI. I'm nervously optimistic. I'm hoping that the trade. I'm hoping that the trade is going to be okay. I mean, I'm hoping the CPI will be okay and nothing will go crazy, and that we'll be able to continue the route we are on. I'd really love to see nothing more but than the SPY get above the 50-day moving average. Again, the problem is this right. Oops. Problem is, let me show you what the problem is. The problem is this can easily be a downtrend until it hits the 50-day moving average. So we have to be very, very, very patient. We have to be very, very, very patient here. Okay. Thank you, Robert. All right. I'm going to repost that here for everybody. Here. There we go. That's the instructions you need to follow. Here's the instructions you guys need to follow. There it is. All right. Cautiously optimistic. Exactly. Let's look at the options here. Thomas says, are we taking trading on Han? Thomas, we're not taking anything on anything. Is there like a full moon out or something tonight? Seriously. $79, Delta 205, put right here. Right there. Stop loss right here at 202. Dollar General, about 15-day EMA. 60, go right here. This Delta right here, it's a little better. 120 put right there. Schwab. A little more. We need a little more. John, you might have. I'm going to repost what John just said for everybody. You just posted it for me. There we go. You know, this whole thing about splitting the audience between YouTube and Zoom isn't doing me any favors. Have Deanna go back to just doing Zoom, okay? All right. We need a little more juice here. 63.85. Oh, it's all good, John. 24 days out, 69 right here, Delta, 64 put. BJ, now this has we got to wait for this. It's right at the 100-day moving average, so we got to wait for it to break. The box with the option, can I make it bigger? No, I can't. Actually, everybody wants me to make it smaller so they could see the rest of the goodies. No, I can't make it bigger. Yeah, it works just fine, Chris, on Apple devices. We get 30-40% of people from there. And you can always go to YouTube. Retail sector looks very weak. All right, let's continue this. Disney. Don't tell Matt. Look at Walt Disney. Broke down on the low. Looks a lot like another stock that we've held on to in the last few days in the pit. 15-day right here. 89.40. 89 right here. All right. There you go, Bev. Yeah, we'll see about that. We'll see about that, Omar. We'll see about that. All right. Like I said, right around here, 89 delta. Right, 89 put, 70 delta right here for Disney, September 6th expiration. Broke down here, 15-day EMA as a stop right around the 59.78 level. $78 delta, 60 put there. I don't know where Jonathan is. That's a good question. Jonathan wanted to marry somebody before. What energy stock should I buy? Oh, hold on. Hold on there. Let's continue. There are no energy stocks to buy right now on my radar. There's a lot of utility stocks, but not energy stocks. 42.50. 38 days out. Expiration September 20th. Oh, of course, Richard. Some more than others. 82 delta, 45 put. And Matt, when you put a CTA on Zoom, please make sure you put it on YouTube.
Okay.
Have you been doing that?
Uh, no, but I will.
Yeah.
I have a couple times if I remember it, but
You're gonna have to remember it
yeah.
till we stop doing what Dion is doing right now.
Yep.
Yeah, Richard says my first time I was ready to marry the bartender. Oh, we all were. Not for swing trading, Sean. All right, let's continue. Let's continue. Oh, dear. 1 second, folks. 1 second. Okay, there we go. Let's continue. All right. We're gonna put our stop right here at 42.50. We're gonna go 38 days out. 45. 45, right here. 45. 81 delta, right there. Pink Sparkles is great. I like Pink Sparkles. It's easy to remember. Uh, okay, we're moving to the long side. Nice breakout on the stock energy. 50-day moving average is a stop loss. About 77.50. Um, looking at calls here. Right here. Oh, nope, 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 nope. 38 days out. 75 call right there. Yeah, I heard, Cyrus. Great news. Real good news. Let's continue. O, O Realty. 15-day EMA as a stop right around the 59 level. 30, 38 days out, 86 delta, 57.50 right here. HCA, healthcare. Healthcare is still going up, which means we're still looking at defensive assets. 354 as a stop, 38 days out. We'll do a spread here. We'll do the 365 and we'll sell the 370. Buy 365, sell 370. UHS also looks good, but they're too related to each other. Jeffrey, as I've said this a million times, where Jeffrey, let me ask you a question. Where do you come up with the green arrows? What's with the green arrows? Where do you get the green arrows from? Now, okay, great. Now, what does this have to do with the dashboard? What I'm doing right now? Do you have any idea what it has to do with the dashboard, what I'm talking about right now? Because I have no idea what it has to do with the dashboard. I'm telling you, there's like I think there's like a full moon out there or something tonight.
That's saying Mars is in retrograde.
I don't know. Is it? Like what is what I'm doing have to do with the dashboard? All right. So HCA looks good. 15-day EMA is a stop loss. 38 days out, buying the 365, selling the 370, expiring 20th. Oh, that explains it all. That explains it all. That explains it all. Next one, HCO. Looks very, very nice. Right over here. I would wait for this to be at the 8-day MA right around 458. Until then, we're going to wait. Yes, Richard, but I'm not going to explain every time we're here that this is just a watch list. You guys understand, most of you understand, this is just a watch list. It has nothing to do with any program. I'm not giving you premium entry and exit signals. I'm just showing you stocks that are on my watch list so that I can kill two birds with one stone and do my analysis in real time with you, and at the same time show you what stocks I'm looking at. Just so we're all on the same page. It's a watch list. Yeah. Okay. Just want to make sure. Spreads are too wide here. Sometimes I give bonuses, but then I'll tell you it's a bonus trade and I give you all that stuff. Let's continue. Spreads are too wide here. And we're not at the 8-day MA, so we're going to just skip this. No problem, Jeffrey, but this has nothing to do with the Pro Trader dashboard. I like Palantir still for a swing trade. I know that some of you got in on it this morning. Put my stop right here at about $28. 28 days, 24 days to go, September 6th, expiration. Right here's 28 call. And a stop right here about 27-ish. Okay. If the CPA tomorrow is good, it'll help decrease yield, and the yield goes down, interest rates I mean it will go down, bonds will go up, and this will help if bonds go up. So keep an eye on this tomorrow, especially, okay? Very, very cautiously keep your eye on this tomorrow. 15-day EMA, 38 days out, 76 delta, 145 call. Still like upstart. I like this trend here. Right around 30, maybe 32, about 24 days out till about 67 delta, 34 calls right here. All right. Four. Remember I gave you guys this stock in the pit about a week ago? And yes, you all made money on it. Don't lie. You all cleaned out and made money like bandits on it. It's now breaking out for a swing trade. I know you did pink sparkles and everybody else did too. Whether you day traded it or you swing traded it, yeah, still in it. Yeah. I know you. I know who you are. 50-day as a stop. Remember, I always pick my day trades on the fact of whether they would be good swing trades because I don't want to make an ass out of myself and get out of a trade and then tell you my win rate is 91% when it's really 95.8% or something when I still like the trade. That wouldn't be right. Good, good, good. Four, yeah, four. I still do it. I still do it, Omar. Four shift. I call it the stock shifty. I've called it for years. I've been calling it shifty. It's very shifty, this stock. Good, Murmas. Good. Yeah, 70 would be my stop. And this thing moves. It's got a $5 ATR. Uh, 71 delta, about 70 right here. 70 call. 70 call is what we want. Yeah. And Matt, make sure you get all the cool testimonials. Some people think they are recommendations, even though you repeatedly. Yes, yes. Oh, look at Steve. He made 48% on four. Oh, definitely, John. The comedy's definitely a bonus. All right. Keep an eye on this stock, AEM. Now, one thing you guys, uh, Steve says days on four. I don't understand I don't understand the question, Steve. Can you rephrase your question? And please, okay, guys, there's really no secrets here. Can you post everything so everybody could see your questions? Good. Pink sparkles. Get that, Matt. I don't understand what you mean days on four, Steve. Can you explain your question? Frank, we were not far away from it. We're closer than you think. How many days out? I gave you the expiration of here, four.
It was 920.
Yeah, 920 right here. There we go. Uh, AM. Now, here's what I was saying. Nice. Get that from Vivek. Nice. Um, you see right here how it goes back and forth. It goes up, but then it comes down and it comes up. There's a lot of price action from the previous day. That's okay. That's okay. That's not a bad thing when you see that. Excuse me. It's not a bad thing when you see that. It just means you'll have to be in the trade a little longer to withstand the pressure to get the upside, those drawdowns. But always um, ask yourself, well, yeah, you want to wait for it to go above this area. I don't really count the wicks. I only count the meat. Okay. Carrie, when you're looking at support and resistance, a lesson for you guys. When you're looking for a breakout and you're looking to the left to see if it's safe to cross the street, you don't have to worry about the wicks. Yeah, you don't have to worry about the wicks too much. Forget about the wicks. Wicks are not, wicks are telling you that the price couldn't hold the area. Okay. So we're kind of like there right now. We're a little past that. And look at VWAP. Hit the VWAP, and here we go again. Frank says, how do you determine your stop parameters, support, cycle lows? Frank, why don't you, Frank, is this your first time here? Are you new here, Frank? How long have you been here, Frank? Hey, guys, what do I use as my stop loss parameter? Maybe somebody here can answer the question. That's two people. Anybody else want to chime in? I don't use the 8-day. I use the 15-day EMA. Every single day. Every single day here. I think there's like something going on in the water today, Matt. Seriously, I'm not kidding. Like there's something going on in the water. Guys, I've given you 15 examples, and almost every one I point to the 15-day EMA. Every one, 15-day EMA, 15-day EMA, 15-day EMA right there. Yep, or a pivot below it, exactly. I do the same thing every single. That's why I'm asking Frank how long he's been here. Yeah, Frank, it's always the 15-day EMA or the closest pivot to it. Exactly. 15-day, exactly, exactly, exactly. We're not talking about options. All right, let's continue. Actually, that's it. I don't have to continue. That's all. So there's something that I wanted to tell you. There's something that you guys touched on this morning, and I wanted to touch on this. And this is not a sales pitch. I have nothing to sell you today. I don't even have a CTA. Um, but it's I use the 15-day as a stop loss or the closest pivot to the 15-day EMA. I've only done that every single day that we've been here for the last year and a half on about 20 examples every single day. I'm not Marquet, Bodine. uh, we're not Marquet doesn't work with us. She hasn't worked with us in years. All right. Oh, all right. Okay, so let me just share something with you guys, and then I'll let Matt do. Somebody here can tell you what those calls are, but here's what I'm going to here's what I'm going to say. We're sitting. All right. Somebody this morning, we were on a topic this morning when I was in class when I was doing the pre-market show this morning. And somebody was asking me about one of the programs, and I kind of started thinking about it, but I never really explained it like that. And a lot of people are asking, well, why do you have so many different programs? I mean, you trade momentum. I mean, there's momentum is momentum, right? Well, that's not true. Let me explain what I mean. And if you look at my programs, you will see that all of my, and again, I'm not trying to, I'm going somewhere with this. Every person, every person, I don't care who you are, I don't care how long you've been trading, every person has um, a trading methodology that they're more comfortable with than another. Okay, everybody. For example, let me give you an example based on what I'm talking about. Um, Matt loves to buy trades that are touching the 8-day EMA. He wants to see a strong trend that touches the 8-day EMA. Okay. I like to watch it cross above the 8-day EMA. He's watching for a strong trend to revert to the 8-day EMA. So the 8-day EMA is here, and he's looking for it to touch the 8-day EMA. Let me give you a good example. I
I
want
like
to
the
show you
wicks.
this. I'll show you a good example of this. So, for example, GE yesterday. See how GE touched the 8-day EMA? Matt loves those trades. We trade who we are as people and our personality, more or less. So so he likes the ones that are already above the 8-day EMA and touching the 8-day EMA. He loves those trades. He loves those trades. I like the trades, for example, that go through the 8-day EMA, the A-line trades, right? And Brian does too. I know Brian does too because he loves the A-line trades. Brian sends me every morning two or three or four A-line stock picks that he likes and asks them to match up with me. I've never seen him do that for another program. Now, there's nothing wrong with that at all in any shape, way, or form. The point I'm making is that um, everybody here. One second, I just need to check something. One second. One second. One second. The point that I'm trying to make is that if you look at my various programs, Cam Cam White, he loves the 3-8 crossover. He loves the 3-8 crossover. I love stocks that are A-line stocks, meaning stocks that are just humming along like this for a long time, where you can just kind of get in and ride the trend. The point I am making is that if you look at my programs, for example, they're all momentum based. But if you look at my programs like uh, Stealth Surge, well, Stealth Surge rides the strongest momentum stocks that have seasonality. Or if you look at Gap to Green, well, the Gap to Green uses. Sorry about that. Gap to Green looks at stocks that are gapping. Uh, Cam explained his method very well the other day. Good, good. My point is, they're all based on momentum. All of them are based on momentum. They're all based on relative strength, but their entries based on a different mechanism. One is based on pulling back to the 8-day EMA. One is pulled at a crossover above the 8-day EMA. One is on a gap, on a strong breakdown in a stock that's coming back up, that has strong relative strength. One is income. A lot of people like income. My, especially when we get the trade right, right, Matt?
Right.
I'm telling you, there's something in the air today. My point is that we don't do all these programs necessarily so so I could brag about having 8 or 7 programs. The purpose is because these programs do different things, and it's sometimes I'll get a question, I'll get an email, and it'll say, Roger, which of your programs should I buy? And I'm like, well, it depends. It depends. Completely depends on you and your personality. So Douglas is a little summary of alpha. Remember, I asked you guys, if you post comments, please post it to everybody here. I don't know what a little summary. I don't know what alpha means. You mean alpha top stocks? Is that what you mean, Doug? I'm just trying to understand. Anyway, okay, top alpha stocks, meaning stocks that are outperforming all other stocks on a longer term basis that we jump in. GE was a top alpha stock last year. It was the first 6 months of this year. It just couldn't stop going up. It was just going up and up and up. All right. So, my point is this. It's not always about the best performance. It's about a performance that you feel. It's about a program that you feel comfortable sticking it out with, because every program will have good days and bad days. So, and then there's the pit where I just go crazy and do everything, right? And then some. So again, you need to make sure that it's not. Don't always say, well, I'm going to go with this program because your profit factor is 1.8 and here your profit factor is 1.5. Um, I'm willing to bet someone, and again, Brian, I'm only using your name because I know you like the A line. That there's no other reason for that. Is I know that Brian will probably tolerate a few more A line losers, if I had to guess, than maybe income or gap losers. I don't know. I'm guessing because he's more comfortable with that approach. So try to match a program to your comfort level, or with your idea at least of how the market works, so you don't have to completely rewire your brain. Brett says A-line probably my favorite too. Doug says I really like A-line and the trading pit. But that's my point. A lot of people love the seasonality one. A lot of people love the income one. So again, it has a lot to do with uh see what I mean? Like a lot of people people love that A-line. People love that A-line. I love the A-line. But again, it just depends on now. You will also find that after you trade all of them for 3, 4 months each, it'll all become a wash. You'll be looking at them like, when you buy a new suit in a different color, it's like that extra suit. It stands out from all of your other suits, but then after you wear it 5 times, it just becomes part of your clothing. It's the same thing happens with this with the same thing happens with these setups. After a while, they just become different names. Okay, but again, A-line is a program that we have. Then all them great, but Pit is my addict. Yeah, Pit. There's nothing like the Pit. But again, the Pit, it's just me going wild with all of the stuff that I know. See what I mean? Fluffy, Stealth Surge, Pit. Again, you guys get my point. Matt, do seasonality. I'm going to thank you, Steve. I'm going to go take off and folks, I don't know if it's me or not, but there's something in the in the air. Can you guesstimate the win loss on VIP following? Steve, that's a great question. Again, can you guys post? See, you asking a good question, but why are you asking me? Why don't you ask the folks here, Steve? Here's what Steve's asking. So here, I have a question for you guys. Uh, so here's a question. I know a lot of you guys are bean counters. I know a lot of you guys are bean counters. Have you guys ever done a a study? Now I know what you mean, Bodine. Now I get what you're saying. Have you guys ever done a study where you've counted what my win rate is out of all of the setups that I give you over like a week or so? Has anyone done that here? I mean, we got 200 people here. We got 100 people in YouTube. Carlos says he does it weekly. So you see, Steve, you're asking the wrong person. Don't First of all, wouldn't an answer from somebody else be more believable than an answer from me? So I'd like stats on VIP room swings. Yeah, can somebody okay, Steve or Carlos, can you give us the numbers? Like what are they? Because I have no idea. I have an idea. Actually, I have a very good idea. No, 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 Angie, those are the wrong numbers. Those are the wrong numbers. They're saying out of all the hit list trades that I give here every day, how many of them tend to work out? Vivek, you've been doing it for a while. Vivek says 70%. I would imagine it's between 70 and 75%. It shouldn't be more and shouldn't be less. It should be between 70 and 75%. Now, now, if I added volume studies, it would go to 80%. In the pit, I give you all of these trades, but I filter those and I give volume studies. In the pit, all the hit list trades, you're probably at 85%, 80, 85%. Here, 70, 75%. There you go. So again, if somebody does that here, please let me know and I'll repost it for Mr. for who was it that asked me? Was Somebody here asked me that. Yeah, so Steve, can you make it so that when you post, it's not going to host and panelists, but it's going to everybody so that everybody could see the questions that you're asking? Would you please do that if possible? Thank you. Thank you. All right, guys. Matt, take us through seasonality and show us how the world works. And remember, we have CPI tomorrow. There you go, Vivek.
All right. Sure, I still have YouTube up. Okay. I do. All right, folks. Just the streak of things not making a lot of sense are about to continue because seasonality is kind of all over the place. So you'll see in a second here. All right. Here's the long side. You'll notice a lot of these profit factors actually don't look too bad. Most of them are pretty strong, except for energy and communication. And the win rates are mostly okay. 64 is not great on consumer discretionary, but and industrials, but you got 70, 76, 100 on real estate. Excuse me. So just keep that in mind. When you go to the short side, energy, very strong short, was a bad long, was a good short. Uh, this is making sense right here, right? This adds up. Low profit factors on the short side, low win rate. That seems to be okay. But when we go to 10-day hold, we are not painting the same picture. Profit factors aren't terrible, but they're really not very strong at all. And coupled with the win rates, they're just uh, negligible at best. Really, real estate, 4 trades, 100% win rate. I mean, folks, this sample size is so small. There's not much we would take off of that, but most of this just doesn't look good. Consumer discretionary, maybe your strongest, but again, today doesn't look great. On the long side, the 10-day hold is all right. I mean, 64, it's above, half, but that's right, John. Let's go to the long side and the short side. 10-day hold, I will sort it by our winners so we can grab our numbers. 191 on the long side. 106 on the short side. That's actually bigger than usual. And on 10-day hold, you've got 49 to 70, 155 to 60, but you need to look at our profit factors. Wrong way. $173 to 1.5, and you're breaking even or doing okay on 313. But if you look at these accuracies, it's kind of a miracle that we have that many profit factors because these are barely skirting the line. They're almost entirely in the 50s, some even in the 40s. A few stronger ones up here, which you'll notice have the higher win rates, but you've got a lot of lower sample size up here too. As far as what's dominating the top here, it's not really lining up with our sectors. Strongest is consumer discretionary on the 10-day hold. Healthcare is actually the strongest on the long system. But when you sort it, it's only a couple. See, 1 trade, 3 trades, 6 trades. We throw those out. So we only want to look from here down. And you got a few in there, but not a lot. Yeah, this is the back end of data miner, behind the scenes, you could say. So the data miner is generated by AmiBroker, which is this software. It gets pumped into Excel, sorted, and then gets pushed over to data miner. So this is just one step in between. Right, let's run over to the short side. Energy was our weakest sector. Right there. Um, Pretty strong for those are not numbers to snooze at. 17 trades, 82% win rate with almost an 11 profit factor on the ETF, which is a little bit more difficult than the stock for it to get those kind of numbers. Got KMI, Bang, Chevron, ConocoPhillips, Exxon's here, PSX is here, Marathon, the whole gang's there. Somebody said, please look at LNG. No problem. Because I'm about wrapped up. So sort it by this. Don't have it. If it's not in the S&P 500, I don't have it. But what is LNG? Not liquid natural gas, I wouldn't think. That would be too easy. It is. Okay. It's natural gas. We have an ETF for that. I think it's UNP. UNG right there. It's weak. Sometimes it is easy. Good question. Starbucks. Not for me. Be careful. It's an old saying, sell the rumor, buy the news. This is confirmed. So, uh, yeah, I would. Most definitely. That's got to be a sweet trade, John. Oh, oh, if it's not a trade, then uh, probably not. So if it's a long term hold, if it's a short term, yeah, take the profit. Gotcha. All right, folks, that's all I got. If you have any questions, send an email to us. And I will see you all tomorrow.